Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Anywhere Real Estate Inc. quarterly report. Anywhere Real Estate Inc. offers a diverse range of businesses and services through its subsidiaries. The company's primary offerings include residential real estate services in the U.S. and internationally franchising of prominent brands such as Plus Better Homes and Gardens Real Estate Plus Century, 21 Plus Coldwell Banker, Plus Coldwell Banker Commercial Plus Corcoran, Plus Era Plus Sotheby's International Realty Global Relocation, services under the Cardis brand Lead Generation, activities full-service residential real estate brokerage business under various brands, Coldwell Banker, Corcoran and Sotheby's International Realty, real estate auction, joint venture title, escrow, and settlement services for consumers, companies, and financial institutions. Anywhere Real Estate Inc.'s stock price has skyrocketed by over 182% in the past year due to a combination of factors. The most significant event was the merger announcement with Compass Inc. on September 22, 2025, which caused shares to jump by 63%. Prior to this, the company had already demonstrated strong performance, reaching a new 52-week high and delivering an impressive return of 211.82% year-to-date. The third quarter financial results also contributed to investor confidence, with operating EBITDA of $100 million, increased revenue, and significant cost savings. These factors have likely driven the surge in stock price, making Anywhere Real Estate Inc. a standout performer in the market. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, an increase in average home sale price, closed home sale sides, and gross commission income per side have contributed significantly. Additionally, higher transaction volumes at owned brokerage groups, intercompany royalties, third-party franchisee royalty revenue, international revenue, and increases in resale and refinance revenue have all played a role. On the decline side, decreases in closed home sale sides and average home sale price have been major contributors. Furthermore, declines in commission rates charged by brokers, greater commission payments to independent sales agents, lower royalty rates from franchisees, and concentration among top 250 franchisees have also led to revenue decline. The financial performance of the company has experienced a significant downturn. Net income plummeted from $7 million in 2024 to a net loss of $13 million in the 3 months ended September 30, 2025. This trend continued for the 9-month period, with a net loss of $64 million in 2025 compared to a net loss of $64 million in 2024. Profit margins also suffered, with a negative margin of minus 0.8% in 2025 compared to 0.5% in 2024. The primary reason for this decline is the increased incentives paid to franchisees, which has led to higher costs and reduced profitability. Additionally, lower commission rates charged by brokers, greater commission payments to independent sales agents, and lower royalty rates from franchisees have all contributed to the decrease in profit margins. The company's financial performance reveals a concerning trend. Despite generating revenue, it is struggling to convert this into positive operating cash flow. The net cash used in operating activities for the 9 months ending September 30, 2025, stands at minus $15 million, indicating a significant drain on its liquidity. This negative operating cash flow raises concerns about the company's ability to meet its financial obligations and invest in growth initiatives. The company's debt level and interest expenses have undergone significant changes. Interest expenses have seen a notable increase, with a rise of $9 million on page 45 and $49 million in annual interest expense due to new debt issuance on page 52. The total interest expenses increased from $38 million to $47 million, 2025, and from $117 million to $119 million, 9 months ended 2025. The company's debt level has also seen a substantial increase, with the total short-term and long-term debt rising from $2,521 million to $2,576 million on page 24. Additionally, corporate debt increased by $55 million on page 51, and there was an increase in revolving credit facility of minus $75 million and proceeds from issuance of senior, secured second lien notes of $500 million on page 12. The company's financial performance varied across different segments and regions in 2025 compared to the previous year. The franchise group was a standout performer, with revenue increasing by 45% and segment operating EBITDA reaching $415 on page 37. In contrast, the Title Group showed mixed results, with revenue increasing by 34%, but negative EBITDA in some quarters, indicating poor performance. The Own Brokerage Group was the poorest performing segment, with gross commission income decreasing by 2% and resulting in significant losses in segment operating EBITDA across all quarters. Geographically, Canada and the Northern District of California were also poorly performing regions due to ongoing lawsuits that negatively impacted the company's financials. Management's outlook on company strategy. The company's management is focused on driving long-term growth and profitability through digital transformation and operational efficiency. Key strategies include expanding market share through strategic acquisitions and partnerships, improving operating margins through cost-saving initiatives, and investing in the business to enhance its competitiveness. The pending merger with Compass may also have implications for the company's strategy. Management expects significant improvements in operating margins and operating EBITDA margin, which currently stands at 5%. However, they are cautious about future prospects due to material litigation risks and seasonality in operating results, particularly in the residential real estate market. The company has made several significant transactions in recent years. On the acquisition side, it is worth noting that the company entered into a merger agreement with Compass, as mentioned on page 41 and further discussed on page 58. Additionally, there was another mention of the merger on page 61, although no specific company was mentioned. In terms of divestitures, the company has undergone a name change from Realogy Holdings Corp. to Anywhere Real Estate Inc., which is not a traditional divestiture, but rather a rebranding effort, page 29. The company also reported a gain on the sale of businesses and investments in two separate instances. -$1 million for the 3 months ended September 30, 2025, page 45, and -$5 million, page 48. The company's financial summary reveals that it has indeed paid dividends to its shareholders. Specifically, on September 30, 2025, the company distributed a total of -$1 as dividend payments. This indicates that the company has prioritized returning value to its investors through this means. Concerns about inventory buildup and supply chain disruption are emerging in the current market. Inventory levels are insufficient for various home types and price points, leading to potential stockouts and missed sales opportunities. Furthermore, housing affordability issues and inventory constraints create a challenging operating environment that may disrupt supply chains. These challenges underscore the need for companies to adapt their strategies to meet changing market conditions. That concludes the financial summary for Anywhere Real Estate Inc. Feel free to comment below, and I will be happy to answer them when possible.